Financial. Here on Wednesday morning, markets are digesting some additional data, some disappointing data this morning. Construction spending down, ISM not very impressive, PMI not a good number. So S&P's getting hit a little bit here, down about 7.25 handles right now. You can probably hear some of the noise picking up behind me here. Obviously, the big story today, though, is going to be the Fed. So don't expect a whole lot of dramatic moves prior to the FOMC announcement this afternoon. Now, one thing we're hearing a lot of is the term deflation. We're seeing it in commodities today, certainly. Commodities getting hit pretty hard across the board, from gold to crude oil to grains. Interesting thing is the dollar's getting hit today as well. So we're watching that divergence between the dollar and commodities, looking for a potential trade opportunity. Right now, however, though, it does certainly seem that deflation is becoming more of a threat, and a very realistic threat at that. So we're looking at commodities more from the short side, looking to sell into rallies at this point. In terms of the FOMC later this afternoon, really not expecting anything different at this point. It's hard to imagine the Fed doing anything drastically different while unemployment remains such a problem. This morning's ADP number, again, a disappointment, and obviously the market looking forward to Friday's non-farm payrolls, and we all know what happened last month. That number was a huge miss. So should that number be a huge miss again this month, that could prove to be the catalyst for this kind of long-awaited correction in equities. Now, as Danny likes to say, we don't like to swim against the current, and we don't want to fight the trend. And, the trend of the market is innocent until proven guilty, so to speak. But at some point, I believe we'll see the S&P crack a little bit, and we'll see some weakness before continuing higher. And perhaps Friday's number will be the catalyst for that, should the number come in well below expectations. In terms of trading the FOMC today, my first advice is simple: don't. My second advice, if you have to trade the FOMC, is just remember that typically you're going to have a three-wave move following the announcement. You're going to have that initial quick reaction in one way or the other. You're going to have a retracement, and then you're going to have a continuation in the direction of that initial reaction. So keep that in mind, and certainly watch how that price action unfolds today. And most important, as always, use caution, use stops, be careful out there.